Thinking back, the only real money lessons I learned from my parents were that I was supposed to do well in school so that I could get a good job and make good money because that was really the ticket out of my neighborhood. I knew how to budget and I also knew I needed to live below my means. But that's where my financial literacy actually ended. I remember working at Goldman Sachs and feeling like a fish out of water because I didn't actually know how to invest when it seemed like everyone else around me did and that they grew up learning about it. Although learning how to invest was overwhelming at first, I was able to actually start progressing on my journey when I took one simple action. And you know what that action was? I started to understand the language of investing. So, because of that, I thought it'd be a good idea to make a video today about 6 investing terms you should know if you are serious about taking your financial literacy to the next level. Hi, I'm Nicole, one half of the Wealth Twins, and on this channel we talk about everything money and investing. And if stock market terms is something you're interested in and want to learn more about, then hit that like button and let's get started. Now, the first term I believe everyone should know when it comes to investing is actually the term stock market. Now, the news makes it seem like it's obvious, but when it came to me understanding how to invest, it wasn't obvious. So, because of that, I don't want to assume that it's obvious to you either. Okay? Now, the stock market is any designated place where buyers and sellers can get together to actually trade stock. The designated places where they're buying and selling this stock are called exchanges. Now, some exchanges have physical locations like the New York Stock Exchange, while other locations are electronic, such as the NASDAQ. Now, people who want to buy and sell stock cannot go directly to these stock market exchanges to trade. Only specific companies called brokers can, okay? So if you want to buy and sell stock, you will first have to open up a brokerage account and then give your broker the buy or sell request. The broker then handles the transaction for the trade. Some famous brokerage companies that you can use to access the stock market are Vanguard, Fidelity, and also Charles Schwab. Now, when you buy and sell in the stock market, you're actually not buying directly from the companies that you want to own. You are actually in the secondary market and you're buying and selling stock from people who currently own the stock. Now that you know exactly what the stock market is and how you get involved in it, it might be a good time that we start talking about what you're actually buying and selling, which are stock. All right, so the number 2 term is stocks. Stocks just represent claims of ownership of companies that choose to have public investors. All right, that's a quick definition of what it is. Now, another name for stocks, which you might have heard, is equities. So when you hear someone talking about equities, they're actually talking about stocks. Now, you also might hear people use the word stock and the word shares interchangeably, but they're not exactly the same thing. They're actually a little different, just a little difference between the two, and you should know about it. Now, stocks is just really a general term for ownership, while shares are more precise. For example, if you want to be specific about how much ownership you actually own of a company, instead of saying I own stock in Amazon, you would say that I own 5 shares of Amazon. Now, on top of that, the price you see for different stocks in the stock market is actually based on a price per share. All right? You can become an investor directly by owning individual shares of a company's stock or indirectly by buying shares of a mutual fund, which leads us to our 3rd term of the day. What exactly is a mutual fund? Mutual funds are a type of investment that allows you to pool your money together with other investors so that you can buy a lot of stock for a comparatively small amount of money. Now, a good way to think of this situation is basically like you decide with a group of people that you're going to have a movie night and you all are going to bring snacks. Now, each one of you on your own could have enough money to buy 1 or 2 snacks, or you can all decide to pool your money together and buy a bunch of different snacks so that everyone can have a little bit of each. Mutual funds are basically just like this. This is how they work. They basically work in the same way. Now, the reason why investors like mutual funds are not only that they allow you to get access to a lot of different stocks, but you can also spread your money around and lower your risk, which is always a good thing. We're always trying to lower our risk. Well, most of us anyway. Now, there are 2 types of mutual funds that you need to be aware of. 1, actively managed mutual funds, and 2, passively managed mutual funds. Now, actively managed mutual funds are managed by professional money managers that pick which stocks they're going to buy and sell in the hopes of getting a good return. Now, passively managed mutual funds do have money managers, but their main job is basically just to match the performance of an index that fund uses as a benchmark. Now, question for you guys. Now that we have gone through at least 3 terms, I want to know, am I making these terms clear for you? Would you like to see another video like this about stock market terms? If so, write yes or no in the comments below. Now let's get back to these terms. Term number 4, indices. This is what I'm talking about when I talked about benchmarks, all right? Benchmark index is another term you should know. Have you ever heard of the S&P 500, the Dow Jones, the Russell 2000? Do any of these sound familiar to you? Well, they should, because they're commonly used. These are all indices. Now, all these different indices are a way to get a snapshot of the stock market's health and help you see which way the stock market's performance is actually trending without having to actually track every single stock that's available for purchase. Now, for example, the S&P 500. This index actually follows the performance of the top 500 companies in the U.S. These companies have so many investors constantly buying and selling their shares that they can actually give a good representation of what is happening in the overall stock market. However, it's important to note the S&P doesn't cover every stock that's available in the stock market. So it doesn't represent actually the whole entire U.S. stock market. Now, when you hear on the news that the stock market was up or down today, they are using the information gathered from these different indices to make that statement. So an easy way to understand which way the stock market is trending, if you hear in the news that the S&P 500 is up and the Dow Jones is up, you will understand that the market in general was up. Now, there are also indices for different types of companies, not just U.S. companies, but also different types of companies. For example, the NASDAQ follows tech stocks. So if you find out that the NASDAQ is going up, that means tech stocks in general were going up. Now, it's important to know that even though different indices might be down, it doesn't necessarily mean that the stock you also own will be down, and vice versa. If the indices are up, it does not mean that the stock you own is up. You should basically just use these indices as a way to compare your stock's performance to a benchmark. So that's all it is. Use the indices as a benchmark to compare what your stock is doing to the general stock market. All right. Now, when we're talking about the performance of the stock market, there are definitely 2 terms you should be aware of, and that is bull and bear market. That's because these terms are important to understanding how the stock market reflects how people are actually feeling about the economy. Now, when there's a bull market, stock prices are rising and people are feeling optimistic about the economy. Investors might think businesses are going to make more money, more people will have more jobs, and things in general are looking good. So in a bull market, it can suggest that the economy is doing well and that it's expected to improve. Now, a good example of a bull market was the dot-com boom, all right? On the other hand, if we're in a bear market, the stock prices are falling. They're usually falling, and it can signify that people are worried about the economy. Investors might think that businesses will earn less money, fewer people might be getting jobs, or there could be some type of economic problem in the near future. So a bear market can be a sign that people think that the economy is weakening or facing some type of challenge. Now, a good example of a bear market was the financial crisis that led to the Great Recession back in 2007, 2008. Now, the next term number 6, this is one of my favorite stock market terms to know, and it's dividends, okay? Dividends are a portion of the profits that a company pays to its investors just for holding the stock. Think about the company investing in like a tree. All right, I like to think about dividends this way. As the tree grows, it starts bearing fruit, okay? Now, instead of this tree just keeping all the fruit to itself, because you helped that tree grow, it drops some of the fruit that it actually made right into your hands without you doing anything, And as the tree gets bigger and produces bigger and better fruit, you too will get a portion of that bigger and better fruit. Basically, dividends are a way a company can say, thanks for investing in us. However, not all companies use a portion of their profits to pay out dividends to their investors. Now, some companies actually reinvest all the money they make back into the company because they believe they can grow the company more by doing it. So, before you buy a stock, you have to be aware if that company pays dividends or not, okay? Now, if you like how I broke down these 6 terms and are interested in learning more about investing from my twin and me, along with getting access to some exclusive courses that we offer, then you should really think about joining our private email community called the Wealth Pack. Now, we named it the Wealth Pack because, like a dedicated wolf pack, we promise no member is left behind on their financial journey. And if you're interested in joining our private email community, I will leave the link below in the description. At the end of the day, learning how to invest is a life skill and one you will definitely need if your goal is to grow the money you save and have more control of your financial future. And although it may seem difficult at first, please, 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 please don't let the overwhelm stop you from making the money you have saved and earned work harder for you. If you like this video and you want to see more videos from us, please show this twin some love. Hit the subscribe button and share this video with someone you care about. I'll see you in the next video.